All right, well, good afternoon, everyone, and welcome. Thank you for joining us for today's discussion on daily valuation from table stakes to best practice. I'm John Blumke with DCREC, and before we begin, just a couple very brief housekeeping notes. Want to let everybody know that the webinar is being recorded. The audience members are in listen-only mode, but if you have questions during the discussion, you should see a Q&A function at the bottom of your Zoom screen. Please feel free to type them in there. We'll do our best to get to the questions during the session, and we can always follow up at the end if needed. So with that, look, we're really pleased to have a great group joining us today to discuss how firms are approaching daily valuation in today's environment. We'll touch on operational realities, governance, technology implications, and where the industry looks like it's headed. With that, I'm going to turn it over to our moderator, Rob Tafar of Altus Group, who will be leading today's discussion. Rob, thank you again so much for being here, and the floor is yours.
Awesome. Thanks, John. Welcome, everyone, and thank you again for joining us today. I'm really excited to moderate this discussion. As John mentioned, I'm Rob Tafaro, Regional Lead for Altus Group's U.S. Valuation Advisory Practice. Altus Group is a leading provider of valuation advisory services, including daily valuation and NAV, as well as software and data solutions. Furthermore, Altus Group provides asset and fund level intelligence for commercial real estate industry, delivering that intelligence through a connected platform of technology, analytics, and advisory services. Today, we're here to talk about daily valuation, not as a concept, but as an operational reality that more and more firms are actively working through. The shift from quarterly appraisals to daily valuations is accelerating, and with it comes a whole set of questions. How do you actually build the process? What data do you rely on? Where does the technology help, and where does it fall short? Today, I'm joined by two colleagues who have dealt with this and are dealing with some of these exact challenges. First, Heather Sullivan. Heather, do you want to introduce yourself?
Sure. Hi, everyone. I'm a controller at Intercontinental Real Estate Corporation, working on both our Odyssey Fund and the underlying collective investment trust. About 10 years ago, I was closely involved in developing the processes to create a daily valuation vehicle that invests in our Odyssey Fund. We called our first investors in 2018 and have grown the product since launch. In my current role, I continue to be actively involved in overseeing our daily valuation processes, so I'm excited to share some of that practical experience in today's discussion.
Thanks, Heather. Welcome. We're really excited to have you join us today. And Rob Riker. Rob, I'll pass to you for an intro.
Thanks, Robin. Hello, everyone. In my role as valuation manager for UBS Realty Investors, I oversee all U.S. real estate equity and debt valuations, including our three open-ended funds, which feed into our daily valued fund. Our daily valued fund was launched in October of 2012, and we originally had a proprietary internal system. However, we partnered with a daily valuation service provider in 2025 as technology and best practices have continued to evolve. I'm excited to be here. I'm looking forward to our conversation.
Thanks, Rob. Great to have you here. As I mentioned, really excited about this conversation. So let's just jump right in with the first question. So quarterly appraisals have been the standard for decades. So what's actually changed? Help our audience understand what's driving this shift, whether that's investor capital driven, regulatory requirements, competition from other asset classes, or something else entirely. Heather, you mentioned at Intercontinental launched their firm's product almost 10 years ago. What pushed them in this direction?
The main driver was really investor demand, particularly from defined contribution investors who were looking for access to private real estate, but needed structures that allowed for the daily liquidity and pricing.
Got it. Rob, from the UBS side, why did you see the shift to daily, and why is UBS doing daily valuations?
So as previously mentioned, we have managed a daily valuation process for more than 13 years, and our daily valued fund is a collective investment trust with investments in our three open-ended funds, which provides diversification benefits across multiple geographic and property type sectors. So we have been managing daily valuations for some time. I understand there has been more inquiries and interest from investors over the past few years in defined contribution plans looking to access private real estate.
Got it. Thank you both. So it sounds like the shift to daily valuation is primarily investor driven. So as defined contribution retirement plans grow relative to defined benefit, daily pricing products allow real estate firms to access that capital. From mine and Altus Group's perspective, we've seen a bit of an uptick in inbound calls from clients asking about daily valuations and NAV in the last year or so. This is kind of driven by the last year's executive order aimed at expanding 401k and defined benefit plan investment options to be included in to include alternative assets, including real estate. So there does appear to be a renewed interest, or at least a renewed awareness of these products. So with that, let's jump to the next question. let's look at how firms are putting this into practice. There's definitely a learning curve, one going from quarterly or monthly valuations to daily valuations. I want to get into the specifics of what implementation looks like, the workflow, who is involved, how decisions get made day to day. Rob, maybe we'll go to you first. Walk us through how UBS approaches it, and what would you point to as best practice?
Yeah, great question. The general framework for our quarterly evaluation process has been in place since we launched our CIT. However, we've made refinements to the process, especially over the last 18 months, including more clarity around defined roles and responsibilities. For our process, independent appraisals are prepared by third-party external appraisers every quarter, every calendar quarter usually the quarter after the acquisition is made. And as previously mentioned, we operated under a proprietary system from 2012 to 2025. This involved daily involvement from the portfolio manager, accounting team, and valuation team. And from a valuation perspective, a member of our valuation team would review the daily valuation changes on properties from the date draft appraisals were received through the end of the quarter. We would review the gross value changes to ensure the reported values in our system reconcile with appraisal reports and Argus Enterprise files provided by the appraisal firms. Additional feeds from the accounting system would layer in capital expenditures, debt, and ownership structure. In 2025, we partnered with a daily valuation service provider. This partnership enables us to leverage real-time data and their proprietary systems to help us monitor and report on the daily value of our portfolios. They provide us with daily valuation of our gross real estate holdings and daily net asset value reporting per share for our fund-to-fund structures, as well as direct invest structures. Under this partnership, the valuation and accounting teams can focus on their respective processes and material events, and this relationship has opened up additional growth opportunities for us to attract new capital.
Got it. Thanks, Rob. So Heather, same question. What's best practice? Who actually monitors the assets for material events at Intercontinental?
It's very much a coordinated effort across the organization. There isn't just one team that's responsible. Asset management, portfolio management, accounting, they're all involved in monitoring the properties. To make that work, we created a chart which details what is considered a material event, like leasing activity, operational changes, or other relevant market transactions. And we assigned ownership among the departments for each of those categories. From there, we set up an email distribution, so when something occurs, all relevant parties are notified, including our valuation manager, Altus. Altus then incorporates the events into the valuation model to determine the overall impact, and then we determine whether any adjustments are needed based on our materiality thresholds at the fund level. Overall, it's a combination of shared responsibility and timely communication. And to date, things have been running pretty smoothly, and we hope it continues that way.
Got it. So I'm kind of hearing it's really about building a process that is standardized and repeatable. Also, it's about getting buy-in from across the organization. So from accounting to asset management to portfolio management, et cetera, and making sure everyone plays their part. That kind of leads me to my next question. When implementing a daily valuation process, do you need to overhaul the existing quarterly process, or is it kind of layering it on? Maybe Heather, we'll start with you.
Yes, for sure. Implementing daily valuation really does require a complete overhaul of existing processes. For us, this meant restructuring our entire reporting timeline. We moved from a traditional quarterly close to a much more accelerated one, month-end close at the property level and a tighter quarter-end close at the fund level. We had to get all of our third-party managers on board, internally train employees on new procedures, and everyone really had to learn how to operate differently. We began quarterly reforecasting and were very deliberate to make sure that the appraisal models and accounting records were in sync. This wasn't something where we could tweak our old model. We really had to implement a more responsive, coordinated process.
Got it. Thanks, Heather. Rob, over to you. What are you seeing?
So I guess this would really depend on the valuation process in place. A great resource for funds looking to create a daily valued real estate product would be the Principles of Daily Valuation paper, issued by DCREC in May of 25. Some of the key recommendations and best practices include independent third-party appraisals of each asset at least quarterly, oversight by an established independent real estate valuation consultant or valuation manager, transparent valuation policies and procedures that are applied consistently and reconcile with the fund's end-of-period financial reporting process, a procedure to recognize material property-specific or market-related events, an IT platform that can control the flow of valuation data, distribute and store appraisal reports, communicate review comments, and access to the reports and data by the fund manager and valuation manager. And incorporated daily updates within the monthly or quarterly reporting process, and a process that aligns with the end of period NAV reporting by the fund's accounting team, which takes into account the impacts of expended capital and ownership structures.
Makes sense. So it sounds like it's a combination of both leveraging the current valuation process, but there's definitely work to bring it up to standards of a daily valuation process. And I think it ties back to previous comments about having processes and procedures in place and making sure they're well documented so this whole process can run smoothly. So maybe moving to the next question, now that we talked a lot about implementing the daily valuation process, let's look at where it breaks down. Daily valuation is generally hard, right? We talked about it's not just a standard quarterly or monthly process. There are operational data and governance challenges to work through. Heather, maybe we'll start with you. What are some of the pain points that you and your team have worked through?
Sure. One of the biggest challenges we've been working through is around timing and accuracy of the valuations, especially in this current market environment. It's really difficult to project where values will actually land at the end of the quarter. What we're seeing happening is that the returns can be uneven. So early in the quarter, the returns are largely driven by income. As prelim appraisals come in, you start to see more impact in month 2 returns. And then month 3 captures the final real estate valuation adjustments. That said, this has improved significantly since we started. The timeliness of incorporating changes in valuation has become quicker and more efficient, which has helped smooth out the choppiness of the returns. So while this is all still a challenge we're working through, the trend is definitely moving in the right direction, allowing private real estate to become more of an investment opportunity in the DC space.
Got it. Thanks, Heather. Rob, I got a similar question. What are some of the pain points and what are some of the trade-offs you have to deal with? What do you see from a appraisal perspective specifically?
Yeah, that's another great question. The backbone of the daily valuation process is to establish intra-quarter values that are consistent with quarterly ending values of the underlying real estate funds. With this in mind, it's important that the information from the quarterly or monthly process is the driver of the daily valuation process. And the biggest challenge is timely recognition of events that could have an immediate impact on the gross and net values. And you want to avoid significant changes at the very end of the quarter. And this is where a well-defined process is important because there are multiple steps and multiple parties involved. There's the appraiser. You have to get the information to the appraiser for them to what is maybe considered a material event. And then if the appraiser decides to make some assumption changes, then that needs to factor through to down to the accounting side. And for this reason, an efficient reporting and communication platform is a critical component within the daily valuation process. And we've also been trying to implement earlier appraisal delivery and finalization timelines, which will help increase the accuracy of the final day estimates, which in turn could reduce the quarterly end reconciliation process.
Got it. So it sounds like although it has improved over time, I'm hearing kind of from both of you that there are challenges incorporating real-time valuation changes, whether it's factual or even market driven into the daily process in a timely manner. So this is kind of transitions to the next topic of material events. So jumping in there, when something material does happen, so such as a new lease is signed, a tenant's in financial stress and may vacate the property, or there's a meaningful movement in the market, such as cap rates or market rents, how does the information actually get captured and flow into the daily valuations in a timely way? Rob, let's start with you this time. Can you take us through what monitoring for material events looks like at UBS, both at the asset and at the market level?
Sure. Yeah, this is really a multidisciplined approach. We utilize Argus Value Insight as our asset management valuation platform to facilitate the appraisal process. So on a quarterly basis, we're providing third-party appraisers with updated source files, such as monthly and annual income expense information, budgets, current asking rents, updated rent rolls, and leasing information, along with other data. This information will be incorporated into the draft appraisals, which are generally received prior to the end of the first month of each quarter. And once the draft appraisal information is received, review files are prepared by our valuation advisor and are reviewed by our internal asset management and valuation teams. Any new information that comes to light after the draft reports are received, including capital expenditure updates, are provided through review comments. Our daily valuation service provider monitors the review comments and value changes daily and monitors the fund level components, which are being received from the accounting and operation teams. We also rely on the expertise of our valuation advisor on the changes they see across assets in similar markets or across property sectors, such as cap rate movements and legislative changes.
Got it. Thanks, Rob. Heather, over to you. How manual versus systematic is the process for you today? Are you relying on asset managers to flag material events, or do you have more automatic triggers built in?
We do have some automated triggers built in. For example, anytime a lease is executed, our property events distribution is copied on the legal correspondence, which also notifies Altus. Mostly, though, we are relying on asset managers to flag and communicate events as they occur, which has become very much second nature to them. As I mentioned earlier, we went through an overhaul of our process, and over time, it really has become embedded in how the team operates. They're very disciplined about reporting property events consistently, regardless of size. So it's a bit of a hybrid approach, some automation, but really heavily dependent on our asset management oversight.
Makes sense. So it sounds like, at both of your firms, it's kind of using a combination of both automated processes and then relying on inputs from both your internal teams and external valuation teams. So we did talk a lot about process. In March of this year, the Department of Labor issued a proposed regulation that clarifies and provides safe harbor under the ERISA Act in connection with selecting designated investment alternatives for a participant-directed individual account plan, including asset allocation funds that include alternative assets. The proposed rule establishes process-based safe harbors for plan fiduciaries that elect to include alternative assets requiring consideration of 6 key factors: performance, fees, liquidity, valuation, performance benchmarks, and complexity. For today's discussion, let's focus on the valuation factor. In more detail, the plan must determine that the investment has adequate measures for timely and accurate valuations. The rule requires a conflict-free independent process. Notably, it states that the valuation standard is not demonstrated where assets lack observable market prices, but are valued by the manager based on proprietary methods. So based on your experience and some of the comments today, is this standard generally already being met when considering a typical daily valuation process? Heather, I'll go to you first.
Generally speaking, I think these standards are already reflected in real estate industry. There's already a strong emphasis on independent valuation and documented processes. So this regulation doesn't really change the fundamentals of how daily valuation operates.
Right. Rob, I'll go to you.
Yeah, I think so. This is not new to real estate, which has set the standard for other alternatives. We do not create internal forecasts or attempt to predict changes in property values, but recognize changes from independent appraisers. As I previously mentioned, we've been involved in the daily value sector since our fund inception in 2012, and our valuation process has relied on external third parties since the fund inception. This process has been vetted and audited by multiple firms.
Yeah, it makes sense. So thank you both. I'd say that generally Altus groups read as well. So documented and rigorous daily valuation processes have been around for a while in their industry, and it does appear the commercial real estate industry is ahead of other alternative classes. So let's do just one more question on process. Given daily valuation and NAV may be new to a firm or a fund, what would you recommend in terms of time from the initial pilot of the process until going live with real dollars? Rob, we'll start with you, and then we'll go to Heather.
Yeah, well, our daily valuation process predates my time at UBS. I understand that prior to developing our process, we reviewed several methodologies in the marketplace for comparable products and discussed the valuation process with our independent valuation advisor, independent auditor. In 2025, when we transitioned away from our internal system and partnered with a daily valuation service provider, we ran a parallel process for 2 quarters. The first was offline, and the second was live. For a new firm or fund, I imagine the time frame would be at least a year, depending on the valuation process and internal systems in place.
Got it. Thanks, Rob. Heather?
Yeah, I definitely recommend running a multi-quarter pilot before going live. This isn't something you want to rush into. In our case, we ran a mock parallel daily valued fund for a year, working with our evaluation manager and incorporating all key inputs to test the full process. This gave us time to identify and correct any issues and ensure everything was running smoothly. So by the time we called our first investors, we had a really strong confidence in the process.
Yeah, makes sense. And thank you both. I think this is great advice for firms thinking about implementing daily valuation and NAV processes. This is kind of consistent with what Altus recommends as well for clients that we work with. So building in, at least 2 quarters or not longer of a pilot before going live. This really allows allows all parties to understand and trust the process before putting it in front of investors, and making sure you work for all those any log jams, et cetera, that or blockers that may get in the way, and it's kind of a smooth process once you're going live. So let's shift gears a little bit and talk about data specifically. So what are the inputs that actually move the needle in your valuations, and where are you sourcing them from? I'm curious whether you're leaning on third-party providers, internal reporting, or some mix of both. Heather, do you want to jump in first?
Sure. It's really a mix of both internal and third-party inputs for us. On the property valuation side, we rely on our internal teams and third-party managers to report property events, and our portfolio team stays in close communication with Altus throughout the process. And Altus, the third party, assesses the valuation impact for these reported events. Separately, on the debt side, we incorporate weekly market data from a third-party consultant to track the interest rate environment on Treasury and spreads. We developed an internal model that uses those inputs to assess the movement and determine whether a debt valuation adjustment is necessary based on our fund materiality thresholds. Overall, it's a combination of real-time operational inputs and external market data that drive the valuations.
Makes sense. Rob, anything to add there? Are there any data gaps you're still working around, inputs you wish you had but can't get reliably?
Although both continue to improve, I think there's always room for improvement in both timeliness and quality of data. In the realm of real estate appraisals, there's usually at least a month or two lag in the availability of income and expense data. The timing of assessments and tax liability changes, annual insurance premium changes can also occur at different times based on policy changes and in different markets. So appraisal assumptions such as market rent, rent growth, cap rate, and discount rate projections are generally based on appraiser research. But we also compare appraisal projections and assumptions to recent leases we signed in the market and details on lease comparables and cap rate information for brokers and other industry participants.
Got it. Great. So I'm kind of hearing a combination of both internal and external data, which I think makes sense in today's environment. So this will lead us to my last question: is you really can't have this conversation, or really any conversation in real estate or the business world, without talking about technology and AI. So there's a lot of noise in the market right now around AI, automated valuation models, and data platforms. It can be hard to separate what's actually working from what still has more promise than has more promise than actually delivers. So at Altus Group, we're helping clients solve some of these issues discussed today through our Argus Intelligence platform. Our platform provides real-time asset and fund intelligence around relevant market data and valuation assumptions. Additionally, we've recently announced Argus Assist, which is a new agentic AI tool that would be layered across the platform. It's a really exciting time to be working in the commercial real estate industry with all these changes and new technology that's coming. So Rob, I'll start with you on this one. Given your valuation background, what's generally moving the needle, and what are you still skeptical about?
Yeah, that's another great question. There are a lot of ideas and platforms being presented that could eventually improve the timing and quality of information, data, and real estate valuations. I think the availability of real-time data should improve efficiencies and reduce the number of manual inputs. So we're evaluating tools to automate standardized processes and assist in the appraisal review process. For more sophisticated technology, I'm excited to explore the capabilities of the Argus Intelligence platform. From a skepticism perspective, the safeguarding of confidential information and compliance with USPAP are primary concerns.
Got it. Thanks, Rob. And know that they're around the USPAP concern. Heather, jumping over to you, how has technology actually changed what your team does to the day-to-day, or is it mostly augmenting work you were already doing manually?
This is a great question and has been a big initiative for us. We're in the process of developing a formal AI policy to ensure that any use of it is intentional, secure, and aligned with our standards and best practices. We're also putting strong emphasis on keeping humans in the loop. So at the end of the day, people will still be making the investment decisions. We haven't fully rolled out the use of AI yet, but I'm really excited about the potential to process information more efficiently, improve workflows, and ultimately give our team much more time to focus on higher value analysis.
Got it. That's great. So it's really good to hear both your firms are thinking about how technology and AI can drive efficiencies in industry and really get embedded in your workflow. So we covered a lot of ground today, and I know there's a lot of practitioners on the call working through these exact issues. So I really hope today's conversation was as engaging for all the participants as it was for me. I know I definitely learned a lot and really enjoyed the conversation. We did decide we're not going to take questions live, but we do plan to follow up via email individually. So if you did submit a question, please be on the lookout for a follow-up in the next couple days. To wrap things up, Heather and Rob, thank you both for joining me today. This was a great conversation, and I think the audience really got a lot out of it. For everyone that joined, we really appreciate you taking some time out of your busy calendars. Lastly, I did want to thank DCREC for hosting us today. Please be on the lookout for the invite to the DCRE's Thought Leadership Conference in Chicago on September 30th. And we hope everyone has a great rest of the day and week. Take care, everyone.
Thank you.
Thank you.
Thanks, everyone.